This is going to be absolutely insane. Today is December 8th, 2025. I need you to study Reaganomics. This will be Reaganomics on steroids. And what I need you to do is I need you to lock in. Hopium, price predictions, waiting for saviors will wreck you 100% of the time. You have to build a system. So on this channel, there's no hype, there's no hopium. It's systems, processes, structure, and discipline. And remember this, working to beat inflation. As I shared on TEDx, guys, you may think that you're moving forward in your investments, but you're not even beating inflation. What's about to happen is they're going to deregulate this environment. They're going to lower taxes. They're going to print more money than in history, and they're going to lower interest rates as low to zero as possible. And that's going to make money very cheap, and it's going to be worthless. You have to understand that there's going to be a massive transition over the next 4 years. And if you're not on the right side of this token, no pun intended, your family is going to be in a very tough position. Remember, the 1% always remain the 1%. So get out of hype, get out of hopium, build a disciplined, consistent plan that includes cash flow into appreciating assets that are deflationary, that have fixed supplies, protect some of your wealth, and use leverage appropriately to buy assets that appreciate over time and de-risk, because everything is a cycle. So in today's video, I'm going to break down Cathie Wood's, one of my favorite investors out there. So the people that I follow, I don't follow hype or hopium. I follow Cathie Wood's, Ray Dalio, Robert Kiyosaki, Warren Buffett, Charlie Munger. So this is not going to be an exciting video. This is what she's about to explain, but I really want you to pay attention and listen to what she's saying about Reaganomics on steroid. And then we're going to look at Brian Armstrong and Larry Fink sitting side by side on stage at DealBook. And we got to get prepared for what's coming, family. And then at the end, I'm going to share with you exactly my portfolio on what I believe. You don't have to do it, but what I believe is going to not only help me beat inflation, but help me build wealth for my family and protect me from the inflation that is coming in 2029.
And it is striking that gold relative to M2, remember we're saying M2 is starting to flatten out here. Gold relative to M2 really is as high as it's ever been, except for the Great Depression, when the money supply was collapsing negative. It's no longer that now. And back then, gold was revalued. Or I should say devalued. It was a devaluation of the dollar in terms of gold. And that's why the spike back then. Now we don't have the first condition anymore. Money growth has turned positive. But we do have the second condition in terms of the dollar losing value relative to gold. And I think one of the bets that investors in gold are making is that the liquidity that spewed out during the COVID crisis is still going to find its way into inflation. We don't think so if money supply is topping out and velocity is rolling over. Now, I would like to give you, now that everybody thinks gold has only one way to go, if you look at the last two spikes there, meaning the last two other than the Depression, so the one in 1980 and the one in a minor one in 2011. In 1980, gold peaked at $850. I was very young in my career, and I remember the day.
Listen, guys. Listen.
And over the next 5 years, 4 to 5 years roughly, it dropped 67%. Why was that? It was because Reaganomics was working. And investors decided to focus on the equity market and the bond market instead of hedging, continuing to hedge against the inflation that had been debilitating during the 70s. Inflation came down and continued falling. And
Okay, so that's the part I want you to pay attention to. I want you to understand this part. Okay, so yes, things are going to get bullish. The markets are going to boom. Taxes are going to come down. Money's going to be printed. Dollars are going to be worth less. The markets are going to go whoom. But what goes up always will come down. So diversification is extremely important. That's why I use cash value life insurance. That's why I'm banking on Bitcoin for the long term, right? That's why I use cash flowing dividends and I move cash flow into my deflationary assets. So let's listen to what they're all preparing for something. They're telling us to look this way, but pay attention to what he says. So important. Listen, listen. Boom. Okay. So that's how I want you to think about this. And that's how I'm thinking about all of this, family, all of this. Okay. It's a hedge against a D or inflationary dollar that is becoming debased since 1913. It's collapsed 96 to 97%. There's no hype. There's no hopium. It's just facts, figures, numbers, logic. This is what actually is happening now. Okay. So I want you to think about this on a deeper level right here. Okay. So this is understanding this. BlackRock says Bitcoin ETFs are still their top source of revenue. So that's Larry Fink. We're just using logic. That's Larry Fink, the largest asset manager in the world that is bigger than most countries' GDP. From the minute you wake up to the minute you go to bed, everything you touch. I just brushed my teeth. I'm sure BlackRock is top 3 holder in some of those products. Everything you touch, they're the number, probably the number top 5, top 3 holder. They are the largest asset man, 11 trillion under management. Okay, bigger than most countries' GDP. So BlackRock says Bitcoin ETFs are their top source of revenue. Larry Fink says sovereign nations are buying Bitcoin. JP Morgan is offering products tied to IBIT, the very CEO that told you it's used for money laundering. Both of these people told you that. Vanguard, an old ass bank, now allows clients to access Bitcoin ETFs. Bank of America suggests 4% allocation. Charles Schwab plans to introduce a Bitcoin ETF early in 2026. Abu Dhabi announces it bought 520 million of BlackRock's IBIT. Texas bought 10 million worth of Bitcoin. The Fed ended quantitative tightening on December 1st. There's a 95% chance Fed's cut rate this week. Are you calling Bitcoin the top at 126,000? Okay. So here's where my personal narrative comes in is I am not thinking about tomorrow. I am not thinking about next week. I'm not thinking about next month, next quarter. I am thinking 2030 and beyond for my family. And this is how I make my decisions. So I built my portfolio based on CAPL DR. It's what I created. So I understand inflation. I study it. I understand that my family and my parents and my grandparents got poor every single year without being educated on this. That's the silent killer. $1 million, guys. They're lying to you. You put your money in a 401k. Like you have no idea what taxes are going to be when you retire. That's the retirement plan. You have no idea. So you put your money, you can't touch it. You get penalized if you touch it. You put it into a 401k. And then when you go to retire, you have no idea what the tax implications are going to be. How do you plan for retirement? It doesn't make any sense. You're locking up your capital. You should be taking sovereignty of your wealth and creating cash flow, because income and cash flow are different. Income is what you get paid. It's someone else's debt. Cash flow is what you create from the income. You should invest first, then spend after. So I always invest first. So I create cash flow. Every time I get paid income, it's someone else's debt. I take the income and I put it into cash generating dividends. 10% of my income goes into cash generating dividends, which create more cash flow. Okay. I constantly am working to scale my businesses, my ecosystem, so I can create more income. Once I create more income and cash flow from dividends, they go into assets. Assets that are deflationary with fixed supply. My top holdings are, I'm never going to gatekeep from you guys, Xrp, Bitcoin, both deflationary assets. That's my number one and number two. Hence why they're number one and number two. They are deflationary. They're opposite of the US dollar. They have a fixed supply. It's built into their code. So they will become more valuable over time. XRP, it's utility, and Bitcoin, it's scarcity. Okay. Next, number three, WFI just shot up into the number three spot. WLFI, World Liberty Financial. I'm making a speculative guess and investment on the new decentralized form of world banking. There's no borders in banking. Eric Trump, Donald Trump, Barron Trump, the Witkoff boys all created World Liberty Financial. Donald Trump and Steve Witkoff stepped out because they're writing the rules. Okay. Then I'm going to be stacking ABTC up into my number four spot. That is on the stock side, American Bitcoin. I own the picks and shovels and the treasury. So I have the picks and shovels. I have the gold, which is Bitcoin. Okay. And then tomorrow I'm going to be adding XXI. It is not out there. Be careful. XXI is on the stock exchange, but XXI is another Bitcoin treasury. And I'll continue to drill down what I'm doing here. What am I doing? I'm looking at the landscape and I'm using logic. I'm not using emotion. Okay. The logic says that BlackRock is the largest asset manager in the world. And if you look at the top 100 treasuries, American Bitcoin's number 23. I'll break this down. I'll work on that tomorrow's video to show you guys a little bit deeper what I'm talking about. You got the Trump Foundation or the Trump family. Trump Media is in the top, I think, top 10 in Bitcoin treasuries. You got BlackRock, you got Riot, all these. I'm positioning myself in all the biggest transitions in the financial system, the new digital gold, the new DeFi banking, the new bridge currency. And that's what I'm doing. I'm sticking to it. It's Warren Buffett style investing. And I'm just putting it out there so you can measure how I did. You can measure how I did from 2020 to 2025. My XRP went up 800%. My Bitcoin went up 200%. My overall portfolio, 340%. It was life-changing. As people lost 24% of their purchasing power, my family's overall wealth grew by 340%. Okay. I like bear markets. I don't like bull markets. I hate the bull market. I want this weirdness to get over. I want it to go red, and I want it to stay red as long as possible so I can buy more good companies at a fair price. Then when it profits, I take profit from assets. I pull it into cash value life insurance. They're cash value life insurance. They need cash in them. You need to fund them properly. You need to put money in them. Okay. They're not magic money machines. They're not retirement policies. They're insurance policies, and that they're being set up incorrectly and probably sold incorrectly. They're insurance policies that have the ability, because of tax code 77028 that was created in 1913, for you to leverage the cash value with no liquidation risk, comes off your death benefit at a very low interest rate, around 5%, to do what? To buy more cash flow, to buy more assets. So when I max fund my policies as the bull run, as the appreciation goes up, now I have put 100,000 in. Let's say I can borrow 60,000 from that. I borrow 60,000 at 5%. As you run from the markets in the red and the panic, I buy the red with leverage that can't be liquidated. The next bull run, I pay off the leverage and I bought free assets. That's how you use leverage to become wealthy. Okay. We're in Americans trained to use leverage to become poor. We buy a car that's a liability that depreciates right when we drive off the lot. The interest rate takes away from our future self, and we're not even beating inflation. So it doesn't matter what your 401k does. You're getting crushed. Okay. That's CAPL DR, cash flow into appreciating assets. I put money into protection. I use leverage to buy more assets, and DR is de-risk, 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 de-risk. I say it over and over again when I'm coaching people. De-risk. My high risk, high return dividends, I de-risk out every single Monday. It'll be hitting my account today. Boom, I de-risk out and I buy XRP and Bitcoin. Okay. I pretend those dividends are going to collapse, right? So that's how winning is done, guys. It's a system that I have. It's discipline, consistent. The reason why people lack peace is because they lack discipline. The reason why people are waiting for price protections because they lack discipline. Hopium is the crack and the drug that keeps people broke in investing. Warren Buffett is not sitting there hoping for a certain token to go to a certain price, or hoping that Coca-Cola is going to go parabolic. He is buying good companies at a fair price, holding long enough for it to compound, taking profits when it does, and buying more cash flow. That's how winning is done. So I hope that helps. I will be traveling this week, so you'll see my environment will change. So I'm just doing this quick video from my home, and then I'll be traveling. So I'll do the best I can to have high quality videos, but I don't know how I'll be traveling out of the country. So we'll see how that goes, but I'll keep the videos going. I'll keep them live. Remember, I don't do WhatsApp. I don't do Telegram. Those are scammers. You don't need a Web3 account. We do not invest people's crypto. We do not invest people's money. I will never reach out to you, never send anybody your crypto ever. We are an education platform. We educate people. We teach people how to fish. In the description of my video, you can join the 3T Warrior Academy. You can get in the Warrior Ascension program, where I peel back the curtain even more than I do on here. I'm like, here's everything. We have live calls, community calls. Get in the vibe, get in the tribe. Over 14,000 people since 2020. We have 4,000 active warriors on a daily basis, just like you, trying to get your shit together. That's the description video or my social media platform. And as we always say, warriors, let's get your shit together. Love you guys.